Good morning, everybody. Can you guys hear me? Oops, I got this in the wrong place. Sorry about that. This streaming software is still kind of strange. It says test with guest. That's weird because I was testing to see what it's like to bring someone on because we're planning a webinar, as I've talked to you guys about. I changed the name to today's date, but it did not show here. I don't know why. I guess I'll change it later. But I see you guys are finding your way in, and that's the most important thing. So, good morning, everybody. I'm still getting used to this whole YouTube live thing. It's kind of fun, but it's definitely quirky and different, and things that I obviously don't know that I have to continue to figure out and learn. Not sure why it didn't change the name, but anyway, welcome. I'm also broadcasting from a different monitor, and now I have to get used to looking at the right monitor. So, yeah, if you can hear me, say hello. Let me know you're here. I see that we've got about 12 people so far in the room, and it's growing every second. So, say hello. Got a busy morning. And let me know how the mic sounds. I've kind of moved it closer to my mouth, and that's why I put my broadcast monitor in a different location, because before I had it kind of far away so it wouldn't block my line of sight. So I'm just getting used to a new routine. And if you know me, you know that for all the years I've been doing a trade room, my routine is something that I kind of don't mess with. I don't change it. I do the same thing the same way every day. I've done that for years, and that just helps me with my trading. So now everything's a little different, and I'm a little bit feeling like a fish out of water here. So bear with me. I'll figure it out. All right, so let's just kind of look at what's happened so far. We have this long on the pound Aussie right here, a little bit of an awkward trade. Uh, and it's looking like we have a chance of this working out here. It's just a 200 moving average putting up a fight, and hopefully that works in our favor, throwing up some good support for us here. And if we could push higher and get through the 78.90 level, and it looks like we may have a shot at it, that would be a good sign. So first trade of the day for our trade of the day, pound Aussie. It's been struggling the last few days, a little bit on a downward trajectory with a few losses. That's going to happen sometimes. You know, losses tend to cluster up, and then everyone freaks out. People quit, run for the hills, and then the huge winning streak shows up. That's the typical pattern. I'm not saying that we're going to get a huge winning streak starting with this trade, but you never know. Could happen, and let's just hope it does. Fingers crossed. They happen when they happen. That's the thing. They happen when they happen. Right now, it's we've noticed some pretty tight, choppy, slow price action right around our start time lately. I'm sure that's going to change at some point. So still unable to get through the 90 level, but trying. And crude oil, I don't know. Did anyone take that crude oil trade? I can't even tell if it right at 9, it looks like there may have been a shot at it. Yeah, it's hard to say if you had a time to grab it or not. Anyway, it did get to target 1 of only 10 ticks and then stopped out. But it may have been too fast to grab. I'm not sure. If any of you grabbed it, let me know. That's usually a good indicator if it was tradable or not. And unleaded, too soon, unfortunately, because a really nice move down. So still waiting for the first trade of the day on unleaded. And I noticed that a lot of people joining us this morning, which is great. Welcome, everybody. I don't know who's in the room. I can't see a list of names. That's, I guess, one thing I'm not crazy about with this YouTube live thing is I really would like to know who I'm talking to and who's in here. So if you don't mind saying hello and let me know you're here, and don't be shy. Ask questions. If I'm showing you something you don't understand, just let me know. I'm happy to show you whatever, anything that has to do with these charts and the trades we're talking about. So we're waiting for our first trade of the day on the Dow E-mini. You could see this short trade right here, but hitting its target, it looks like it just happened a little bit too early. 8:30 Chicago time, and it was already on its way when the market opened. So, as you know, we're sticklers to our trade plan rules. Morning, Don, Jay, Bob, Miles, Mary Jane, the Bodega 54 Brad, Armando, John. Nice to see you guys. All right, just had to kind of check behind me here. So I am also in this pound Aussie trade, and another trade that very interesting. Actually, I want to kind of review a little bit of some of the newer things I've been working on and that I showed you on Monday with the Spotlight Master Suite, some of the diamond level setups. I've been trading them. The one that I've been kind of learning, and it's been an interesting experience. I've never really traded this time frame before, is a 60-minute chart with the pound Aussie. And I showed you the other day 3 different variations of a trade plan, 3 different trade plans, 3 different configurations. And what I'm finding is interesting is that if you combine all 3, because they all happen at different times, you get more trades. And so I actually took one, and it worked amazing, especially with FX Synergy, because the trade gets managed. So I don't have to worry about watching my chart every hour, and I just let it do its thing. It worked out. I woke up this morning, hit 3 targets, had time to move my stop and lock in a little bit. Then it came down and stopped out, and the trade was over. It was great. I'll show it to you in a little while. Hey, Don Hallenberger, welcome. Nice to see you. And if you guys wouldn't mind, this really helps us out if you just kind of go to the bottom there and click on the thumbs up button and like this video and this session. It'll really help me out. Trying to build the community here, and the more likes I get, the more YouTube's going to like us also. And that's great. So if you don't mind, please click on the thumbs up button and like what you see. Hopefully you like what you see. And also, don't be shy in any questions you have. I have other strategies, obviously. Mostly we're focusing here on Spotlight, Power Trader, and Master Suite, but I could pull up Counterpunch, Catapult, whatever's on your mind, equities, futures, forex. I'm here to help. And any questions you have about any of my stuff that you're using is fair game. So I don't want you to be shy. And even if it's a beginner question, we have people just starting out all the time. And we've all been beginners. So I don't want you to be shy if you're a beginner either. We've all been beginners. So we're here to support you and help you. And any question is good, a good question, except the one you don't ask. So I encourage you to, just communicate. It's all about communication. All right. And also just a reminder too, we are doing the crude oil inventory report. And that will be in another 40 minutes or so. What else? All right, so just to recap here, still waiting for our first trade on the crude oil 8-tick momentum bar. This chart on the lower right corner. Let me make it bigger. Oops. So there was a short trade that hit the target. It was real small. It was our minimum, 10-tick minimum. But it's debatable if there was time to get it, because right at the start time of 9, you could see that it might have stabbed up right here. But I wasn't trading it. I was managing something else, and that's actually too early for me. I'm on the West Coast, so I can't trade this session anyway. It's just too early for me. So I don't know. I don't know if that was even a tradable trade. So we're looking for another one. And there's a possible, this would be a long trade, but it's filtered out. And you could tell it's filtered out because it's gray. And that's one thing about Spotlight Power Trader, is that there are some filters built in. And one of those filters is called the squeeze zone filter. And it's not the squeeze that's been made famous by John Carter, which is all about the Bollinger Band squeeze and a totally different thing. This has to do with the 50 moving average pushing down on the 200 moving average and then getting an opposite trade, in this case a long trade, where the entry is below that 50 moving average and the targets are straddled. It straddles the entry and the targets basically. So that's a low percentage trade. It's a trade that just doesn't win as often. So we filter it out. The software is smart enough to know that. And as you grow and become better with your trading, there are times when that trade, that scenario, the price action is actually more powerful and will push through and it will be a winning trade. And so as you learn about price action, you may develop some other rules that allow you to override the filter sometimes. And because of that, I display the trade in gray. You have the discretion to still take it. You can see what the trade is anyway. So that's not something I recommend. That comes with time and experience. And then sometimes you will lose, even if it's a good idea, because nothing's 100%. And it tends to confuse people because you think, oh, I shouldn't have done that. Well, maybe you should have. It just didn't work out. So that, you learn stuff like that when you could test and get a large enough sample set. But anyway, that's a trade. The short of what I'm saying, long and short of what I'm saying, is that is not a trade in the trade plan. Win or lose, we're not going to count it. So we're still waiting for our first trade in the crude 9 a.m. mini session. And we're already 43 minutes in. Normally, we would start at a 10 a.m. mini session, a separate session with its own set of rules. But because today is the crude oil report, we won't do that today. We'll just wait to trade the crude oil report 32 minutes later at 10:32. All right, so unleaded gas in the meantime did get long. So that is the first trade of the morning. And it's still not too late to grab it. Now, I never recommend that you just randomly take trades. I always say that you have to prove it to yourself and build a strong trader foundation for yourself so that you can believe in what you're doing, so that you can understand and see the cadence of the trade plan, because no trade plan wins all the time. There's going to be losses. As long as you're winning more than you lose, you make money. But if you just start taking trades because you see dots on the chart without understanding the rhythm and cadence of the trade plan, it tends to mess you up and develop bad habits. You tend to quit, throw the baby out with the bathwater, and that's usually a big problem for most traders. So I never encourage that. That's why I never call this a signal service. It is a trade room, but it's more about training and learning. And there are certain key concepts I group into this idea called best practices. And it begins with proving something to yourself first so that you can believe in it, because you have the high enough point of view where you can see the forest from the trees before you risk your money. That's one of the things you can do with this profession we're in, this really strange thing we do called trading, is you have the opportunity to prove it to yourself first before you risk your money. And why most people don't do that, I mean, your guess is as good as mine. It boggles my mind. I have no idea why. But you can, and you should. So, wow, the room just keeps growing. Welcome again, everybody. Really happy to see you all today. And again, please say hello. We've got a lot of people in here, and I can't see who you are, and the attendance keeps going up. And please hit the like button. Really appreciate that. All right, so for those of you who just are coming in, we've got our long trade on the pound Aussie. It's just kind of going nowhere fast here. It was unable to break above 78.90. So let's hope it comes up and attempts again to get higher. There's nothing we can do here. It is what it is. We got the long and unleaded gas. We're waiting for our first trade in the Dowie Mini, upper right corner. Waiting for our first trade in crude, lower right corner. And then these other two charts, you know, I'm going to end up replacing them. I don't really have a feel for the Russell E Mini these days. I don't have a trade plan that I believe in. That important concept I just talked about. I'm showing it just because I'm trying to get a feel for it. And ever since they went to $50 a contract, and then COVID hit, and then, you know, the chart I was really liking and believing in for so long just wasn't appropriate anymore. Just it's too noisy. And so I haven't really come up with anything for the Russell. So I don't really talk about the Russell much. I just kind of show it because I'm trying to get a feel for it by living with it day in and day out. But so far, it's not speaking to me. And then the middle chart, that's a 5-tick crude oil chart. It's faster, obviously, than the 8-tick in the right corner. And it's a really good chart to practice on, like if you want to practice your executions, because you get a lot of trade setups. But I'm not crazy about this chart in general, except for the crude oil report. It works really well, but the trades are, for me, they're just too small on average. They're too small, and I don't think small trades are good because the risk-reward ratios never seem to work out very well in our favor. You need larger trades because of our breakout on the entry and the stop, and oftentimes adjusting around key levels, it really eats into our risk rewards. And so I am not crazy about this chart. Like, for example, this short trade happened 2 minutes after the start time. The one up here was too early. So this would be the first trade of the morning. But I mean, target 4, you'd have to go to target 4 for 13 ticks. I'm not going to like jump up and down and scream from the rooftops for a 13-tick target 4 trade when I'm risking 14 ticks to squeak out 13. You see what I'm saying? But there was a key level adjustment, because instead of the entry being at 52, 2 ticks below our setup bar, it adjusts down. The calculator does this automatically through the 50-cent key level. That's a 3-tick adjustment, but also on the stop, instead of the stop being at 60, yeah, I mean, that one got adjusted too. I have to figure out why it went all the way up to 63. But the point is that it's a small trade, and you had to go all the way to target 4 and still couldn't get a 1-to-1 risk-reward ratio. I'm just not interested in a setup like that. So the only reason why I show this chart is because it gives us a lot of scenarios that we can learn from. And I'm going to probably replace it. Just haven't decided with what. Maybe the 377 tick with counterpunch, because that's still a chart. Well, I use it for the crude oil report. But again, that one could be really noisy and gives you small trades too. So I'm still not sure yet. So our attendance keeps growing. We just want to say hello. Keith. Hello, Lionel and Keith. And Charles. All right, guys. I appreciate you saying hello. And I understand that you guys are using this strategy or that strategy or something else. In fact, if you guys don't mind, maybe you could type in the chat what your preferred strategy is. If you're using one of mine, or even if you're not using one of mine, that's fine too. Just curious what your strategy is and what you're trading. If you guys don't mind sharing, it's kind of nice to know who's in here, who's doing what. And then maybe I could offer my own insights that might help you. If I can, I will. And then while you guys are doing that, if you have any inclination to share, I'm going to show you a couple charts again that we looked at on Monday using some setups that are in the Spotlight Power Trader and Master Suite calculator, you know, the full Master Suite. Setups that are often overlooked and misunderstood, and I'm learning that they're, you know, I always knew that they were charts that or setups that had a lot of merit and that were really good, but I haven't even scratched the surface on exploring them. And I've started recently, and what I'm discovering is pretty nice, actually. I like what I'm discovering. So, like, I never knew that Spotlight Power Trader and Master Suite could be so effective with time-based charts, but I think you need the slower charts to really make a difference, although that may not even be true. I mean, I haven't even tried faster charts, and maybe it will work. But, like, for example, this is a forex chart of the pound Aussie, which is, you know, we're using an 8 pip momentum bar with our day trading, and this is a totally different chart, a 60-minute chart. And I've got the diamond level automation running because I've been testing this and stuff. And just the more I look at it, the more I'm like, you know what? If I could figure out a way to trade this where it doesn't occupy my life, this looks really, really good. And it's also hitting like multiple targets, big targets, which is nice. So it really takes advantage of nice big moves. So you can see that short winner, the long winner, the short winner, almost a trade a day. Funny how that is. Here's a loss. Okay, so small loss. I took this trade yesterday. I mean, it got in at 8 in the morning. I didn't take it until somewhere in here. I got in sync with it. That's what we call snapshot trading, where you trade when you can, and then you look and see if there's a trade you can get in sync with. And because oftentimes the price will hover around the entry for multiple bars, I took that trade and then I set it up in FX Synergy, the tool I use for managing my trades. And I set a percentage to come off at each of these targets, and you can see it hit target 1 and target 2. And then the stop moved up to here, and then that just stopped out in the last hour. And it finished. But a winner. 38 pips to target 1, 59 pips to target 2. And then even the stop was pretty good at 78.78. Got in at 78.58. So after spread, about 18 pips. Not bad for not doing much, right? Pretty low maintenance. And it's the FX synergy is what makes that possible. So you guys might be wondering why the name of today is Test with Guest 4. And that's just because I'm a dunce when it comes to this new technology for streaming to YouTube. I'm trying a new platform so that I can bring on our friend from FX Synergy, because we're going to have a webinar. And as soon as I figure out how this works with bringing him on, it'll probably be next week. We're going to show you the new rapid fire entry tool that he's created for us. Really excited. And so we were testing it yesterday, and we went through several tests, and it was called the fourth one, Test with Guest. And so today I changed the title and started a new stream, but YouTube didn't change the title. So I don't know why. I have to learn how and why that happened. All right, so meanwhile, while I'm talking to you guys, crude oil did get short here at 38 and just hit a 9-tick target. Is not a target we're interested in. It has to be 10 ticks or more. So if the target is too small, we go to the next target. So it would be the target 2 for 15 cents. And it did hit its money management level, which means you move your stop to lock in 1 tick. So now this trade would be in a break-even position. And I usually do it intra-bar. I don't wait for the bar to close. So basically it has to go to target 1 and go 10 ticks. So target 1 was only 9 ticks. So I had to go 1 tick past target 1. You see that little pinprick of a dot right there? If you could see that, that marks the level where if the price gets there, we move our stop. So if you're in that trade, move your stop, lock in your 1 tick to cover your costs, and you're in a risk-free trade now. And that is the first trade for this mini session, coming 4 minutes in front of the end of the mini session at 10. John C., sorry, was that using slightly different settings to the usual GA trade plan? Hey, John, I'm sorry, I missed the context of your question. Are you referring to this crude chart? Maybe you could follow up with me again on that. It shouldn't be different settings. It should be the same. Maybe you're referring to something else. Meanwhile, on unleaded, you got to pay attention here, because if you're long on unleaded, you might have to set a stop and reversal. You do have to set one. And I would adjust it down, not to 77. I would adjust it all the way down to 74. Let's really try to get some price action confirmation and try to stay long if we can. If it gets to 74, that should flip you to short. I mean, you could push it even a little bit lower than that if you want. Because these ticks are so small and it's a thinly traded market, you might have a bid-ask spread. You might even want to push that from 79 down to 69. I don't even mind a 10-tick adjustment for stop and reversals on unleaded. Because look at the size of these trades. You get a lot of room with this 49, 78, 108, 137 tick targets. So you want to try to stay long. You don't want to get short here. It finds support and then goes up the other way. That could happen. But nevertheless, it is a stop and reversal. But let's just make it prove it wants to go down if possible. Because look at this level here. You got here it rejected the price, and here it rejected the price, and now it's coming down again. But I mean, you can't fight City Hall. That's the short. You either believe in your trade plan or you don't. So try to stay long, but if you have to flip over to short, you kind of plug your nose and do it. And maybe you lose a couple. That happens. But won't feel very good if you don't get short and then it zooms all the way to targets and you could have been in that trade the way the trade plan says. The 60-minute. I see what you're saying, John. Well, I showed you 3 different ones on Monday. And one of them was your basic gold level spotlight setups, right? Your pink, your blue, your green, your yellow. That was the first chart I showed you. And that one's going to give you a lot more setups than the other 2 that I then showed you after, the open on the lines setups. So this one is the original spotlight setups. Because I'm sorry, what did I do with it? I'm talking, looking at another monitor, and forgot you guys aren't seeing it. This one. So notice that these are the spotlight colors of the original setups, the gold level setups, and this is the one I traded. Because the other one that I showed you where the results are just like incredible, that's a quality versus quantity trade plan, and you just don't get trades that often. When they happen, they win a lot. And they didn't happen. This happened instead, so that's the one I took. So I showed you 3 different ones, and we could review it. I mean, I can go through it again with you and just talk you through what this one is. The results on this one aren't as good, but you get a lot more trades, and the results are still quite good. I mean, it's winning 80+% of the time, and it's averaging about, I don't know, 22 or 23 pips average net profit per trade per exit. So when you factor in all wins and losses, you can make money with that. I mean, to me, that's good, I think. All right, well, look what happened with crude oil. It failed to get to its target 2. It bounced off its 200 moving average, which is that magenta line right here. And this is why we move our stop down. And it stopped out with 1 tick. That doesn't mean it won't still come down and go lower, but we try to get to break even as aggressively as we can. It almost got to target 2. It missed by a couple ticks here. Does that show up? I mean, I don't know how this is looking for you guys on YouTube. Are you able to see these targets very well? I suppose I can make them larger if that would help. And John C., yeah, good question, by the way. And again, I don't mind going over that chart. There's another chart I want to show you that I also traded. Another one we looked at. And I think I might have erased it. I have to get it. Oh, no, here it is, I think. Yeah, this one. So, a messy looking, ugly chart here on the Euro Aussie. I mean, this is awful looking. And definitely had 2 losses yesterday. 3. 1, 2, 3 losses. That's like maximum. You don't see that many trades usually. So this plan is, if I remember correctly, well, we can look at the configuration, but it goes from 8:30 to noon, and it looks to get 1 winner, and then you're done, power of quitting, but you get up to 4 trades to try. And so maybe I need to take a second look at that. Maybe that's too many. Because it's all based on automation. Like if I'm trading this for real, I'm making small adjustments, and I'm not getting short at 61. I'm pushing that entry down to 59. And maybe that makes a difference, but actually it did push through 59, so it wouldn't have made a difference. Anyway, this is the trade I'm in now. This is today's first trade. And it's similar to what we are seeing with some other charts where there's a lot of support on different charts, and the attempt to get higher and then the move back down to that support area Looks like it might be capitulating and breaking through. We'll see. You can see right in here, still trying, hasn't gotten through yet. But like I just showed you on unleaded, the same thing. And we're seeing the same thing on some of the other charts too. The pound Aussie, you can see it here on the 200 moving average. Still, it's trying to work its way through it. Hopefully it doesn't. It goes up. But if I had to guess, I'd say it probably is going to go down, but you never know. But it's trying to get through that support. So this is happening right now on a variety of charts. But anyway, what I love about this and why I'm showing it to you and why we talked about it on Monday is because it's using some unique setups that some of you didn't know you had inside of the diamond level spotlight master suite, where the bar on one of the three exhaustion dots actually opens on one of these moving averages or within a proximity of the moving average, and that all comes out from testing, and it's produced some amazing results. Just to give you an idea, you have to take this with a little bit of a grain of salt because you still have to place the trade, and we're using this TradeStation chart to place a trade with a forex broker. In my case, it would be a Wanda, so it's not going to be perfect, but it gives you a lot of information here. An 88% win rate, $117 average net profit per trade, only 3 losses in a row, worst case scenario, dating back to October 6th, and a 2.69 profit factor, and hardly any drawdown, although now you could see from yesterday's 3 losses, finally some drawdown. Now, how is it going to recover? That's what I'm hoping. We always want to see a little drawdown and then see it recover. That's healthy. So we'll see. Keep an eye on this. This is really new. But what makes this really interesting are the setups that are so often overlooked, misunderstood, and quite frankly, unexplored. Even I haven't explored them as much as I could, but there are these 3 setups here. Notice the normal spotlight setups are set to false, and down below, some of the more advanced setups are set to true, these 3. And what they do is, again, one of the 3 bars that lines up with our exhaustion dots, one of them has to open on one of our moving averages or within a small proximity of that moving average. And then it has to close in the direction of the trade. In this case, it would have to close down because it's a short trade here. And this is going to be off this 50 moving average. And it didn't open on the 50 moving average. It opened within a proximity of it. So the 50 moving average is at 56749. It opened at 56761. Not quite 2 pips, and I forget what the proximity is of this plan. This came from testing. I could tell you right now, though, 2 pips. So it has to open 2 pips or less to one of those moving averages. And in this case, it was the yellow line. And by the way, it's not even a 50. It's a 57. So even the moving averages have been a little bit optimized. So, I mean, it's definitely an area that could use a lot more exploration. All right. So just we can continue to monitor and explore this setup with this chart and other charts. And I think we're going to do that going forward because there's just so much there that we can unpack and learn from. The whole idea is to take the spotlight and or counterpunch trader concepts of exhaustion zones on the chart and then combine that with the balance line. The balance line being the green dotted line that you see, which marks the balance of power. and then price action itself. So those three things: exhaustion level, balance line, price action. Those are the three basic fundamental pieces, if you will, to spotlight and counterpunch. Then we add additional pieces of information that help stack the odds on our side further. So in the case of this last example, it has to do with one of the bars that opens up on one of our moving averages or within the proximity of 2 pips of it. And one of those bars has to correspond with one of our exhaustion dots. And then you get your setup. So it's another piece to the puzzle that presents a trade that really starts stacking the odds on our side. And the same is true with that 60-minute chart, only it's not using the concept of the open on the line set. It's not the open on the line setup. Instead, it's their setups that use the OSOB indicator down below here, as well as a 50 moving average. Although we don't see any of those trades. Here's one, this yellow trade. And that's not opening on the 50 moving average. It's the exhaustion dots being within a proximity to the 50 moving average. It's a different concept. It works really well. It's actually what gave birth to the Spotlight Power Traders, where you got your exhaustion opening up or appearing within a small proximity of the 50 moving average. And that presents this really nice setup using the Spotlight concepts of the balance line, price action. And look how accurate the trade was. So not only are we getting these really cool pieces of information that most people don't know about, except if you're trading with me and my stuff, but also it has the ability to kind of dance with the price action, tune itself, and present some really accurate setups. Anyway, this YouTube live thing is kind of interesting because I'm not used to talking so much. And there will be times when I won't be talking. It'll just be blank dead space because I don't want to just talk for the sake of talking. If I don't have anything interesting to share with you, I'm not going to. So here is another trade on crude, but we don't do the 10 a.m. mini session on crude oil inventory report days because you may end up in this trade and having to hold it when the report comes out. And you could be underwater, who knows what. So instead of the 10 a.m. mini session on these days, we just save it for when the report comes out at 10:32 or 10:30, and then we wait our 2 minutes. But I will point out, again, the yellow trade, notice the exhaustion dots are within a proximity 4 ticks of the 50 moving average, that yellow line. And then the first bar that closes down below our balance line is what gave us the setup bar. That's how that setup works. All right, so I see a lot of people in here now. Let me just remind you that if you give me a thumbs up, it really helps. If you like what you're hearing, please hit the like button. Kevin accused me of becoming a YouTuber the other day. It made me kind of pause and think, and I actually cracked up when he said that. I'm an old guy, and that's a young person's world, this YouTube thing. But he made sense. I mean, what the heck? I'm doing it. Hopefully you guys like it. And if so, give me the thumbs up. And don't forget to hit the subscribe button. And if you click on the bell next to the subscribe button, you will get notified when we go live. So let me just talk a little bit about what we're doing now. We moved away from our old format from Omnovia, and then we're going to try this YouTube live thing for a bit. And so the schedule will be Monday through Thursday. We're in here at 9:30 Eastern time when the market's open, maybe a few minutes earlier. And then John Lizar, one of my longtime students from many years, probably knows my strategies better than I know them. He runs the room on Tuesdays and Thursdays, and he uses Ninja Trader charts. So most of my stuff is going to work on TradeStation or Ninja Trader. Jeremy says, much easier than Omnovia. Yeah, good. Thank you. I hope you're enjoying it. So I just want to put kudos out there for John, because John has been awesome. And he has a different take on things. He has his own take. He knows the strategies really well. And like I said, I mean, I'm often asking him stuff about my own strategies because, maybe you guys aren't aware of it, but I suffer from Kelly Bundy syndrome. And that means, something random goes in the right ear and something random falls out the left ear. So it's just a syndrome I suffer from. Don't laugh. It's a real thing. He doesn't suffer from that, though. So I'm always asking him, hey, John, why did da-da-da-da? And he always says, because da-da-da-da. And then I go, oh, yeah, that's true. Anyway, if you're a Ninja Trader, if you're using Ninja charts, you want to hang out with John on Tuesdays and Thursdays. And we still have to make him a nice little thumbnail so that you can tell it's his session. I'm in here on Mondays and Wednesdays. So we'll be doing some impromptu sessions. There's going to be some unannounced times when we're just going to jump on. And if you're subscribed and if you click on the bell, you'll get notified if you want to join us. At least you'll have the option because you'll see that we're doing it. And I do want to let you guys know I will be sending out an email next week. Or actually, I probably will send it out this week regarding next week about a webinar outside of the trade room hours. We're going to come back in here and we're going to talk about our rapid fire entry tool for our Trade a Day forex alert service, which is amazing. And just if you haven't seen it or if you don't know what it is, I'm just going to quickly tell you the way it works. We can even look at this trade here that just happened on the pound Aussie. Is that you get the setup in Discord. Let me just pull that up really quick because this is what happened today and it's happening now. You literally get the setup, and with the rapid fire entry tool, all you do is drag over the setup. It gives you everything, right? Your entry, your stop loss, your targets, and then you go Command C, Control C in your keyboard and copy it. Then you just hit a button, and the button places the entire trade, and then you submit, and you don't have to type in any numbers, and it automatically accounts for spread, so you don't have to worry about adding spread on the buy side. It does all that for you. And it knows to take a percentage off at each target that you set in advance as a preset. So it's always going to be the same every trade. And it also knows how to put the right position size, what your risk level is. I mean, that's why it's called the rapid fire entry tool. And we're going to show you how it works and how to use it this coming week. I wanted to do it this week. Like I wanted to already do it like today, but I had to figure out this streaming software, which is why it says test with guest 4 on today's session. Because I thought I changed the title, but it didn't stick, and I don't know why. That's, again, I'm learning this stuff. So today's session will be called February 10, 2021 live trade room session, but I know it says test with guest 4 now, but that was a private, non-publicized test. And the good news is I figured it out, and we were both on the same session, and now that I know how to do it, I can send out an invitation or at least an email to everyone and let you know next week what the date will be and time and stuff. So be on the lookout for that email. Don asking 25% at each target. Yeah, so you could set that up in your presets, but that's how I do it. I take 25% off at each target, but you could instead take 20% off, because what happens then when you hit target 4, let me just show this so you can see it. So 20% at each target, when you hit target 4, you would still have 20% remaining, and you could hang on to that for the trailer. So you could do it either way. I'm typically just going to targets because trailing is a bigger time commitment, and I just find that, I'm not always at my computer for that long, and you kind of have to move those stops manually. It's not programmed in to follow our stop placement technique. I mean, yeah, I could use a prefab technique that, is built in, but for me, I'm happy with just taking profits at the targets. That's good enough for me. So, but you could choose that. Now, what you can do is you have to remember that when you come off at a target, you have to then think, well, how much of my position is remaining to then come off at the next targets? So if you want to take 25% off at target 1, 2, 3, and 4, and then be out of the trade, when you get to target 1 and take 25% off, now you have 75% remaining. So you have to tell the software to take a third of that off at target 2. So then you would set target 2 to 33%, you see? And now you've taken off 2 of your 4 25% position sizes. You have 50% left. So you have to tell it to take 50% off now at target 3. And then you'll have your final 25% still remaining to come off at target 4. So you just kind of have to think it through like that, because artificial intelligence isn't intuitive, right? All right, so let's look at what's happening here, because this is a live trade. This is our trade a day alert trade. It's the first trade of the morning, and it is finally breaking through. And thankfully, our support has held, and we have a shot at this. Now, let's take a peek at what's going on. See that little pinprick dot there? If it gets to that point, we can move our stop to break even. So what I will often do, and this is what I do when I'm trading, is I'll drop a horizontal line, maybe a tiny bit in front of it, fractional of a pip in front, and then I also have that line configured to send me a text message. I have it set to alerts. I have it configured to send me a text message. And then I could step away, and I know that when that text message comes in, I get back to my computer and move my stop. Now, one of the things that we're going to do, and this is, I don't know if this will come out with the rapid fire entry tool this week, but it's coming. And maybe it's in there. Martin is going to tell us when I get him on this webinar next week, is that you could tell the tool to move the stop to break even if it hits this price level. So you could literally set that up in advance too, and then it will do that for you as well, which is one more thing you don't have to be around your computer to worry about. And for me, every little maneuver like that is, I consider it manual labor, like digging ditches. That's another shovel going into the dirt that I don't have to do. Because think about it, multiply that by trade after trade after trade after trade into the future for however long you're trading. And I just consider everything like that to be manual labor. All right, we just hit our money management level. I'm going to pop off here for a second and get behind me on my other computer and move my stop. I'll be right back. So we still haven't hit target 1, but we are at a risk-free position. So even though you don't see the stop moving up yet, because the way the software works is that the bar has to close first, then you'll see the stop move up. But we're trading and we're trading live. We don't have to wait for that to happen. We can move our stop up, and we should. So the entry was at 87. Maybe you made a small adjustment. If so, you want to put your stop to break even. You don't need to take a loss now. And now it's actually hitting target one. Now, is it hitting target one on your forex broker side of things? Maybe not yet, but it will. And 25% should come off, or 20%, depending on how you've got your trade set up. And I'm actually still waiting to get filled, so I'm hoping it pushes up again to give it a chance. So one thing I've learned also is that when my trade chart hits a level and my broker doesn't fill me, I'll wait a little bit, but I might just hit the exit 25% button. There's a quick exit button where I could literally exit and take that 25% with a partial profit. Because what I don't want this to do is come all the way back down to break even when I could have exited with a partial profit. So that's a style decision that you have to do. I mean, I could wait also and hope it comes up again and I get filled. So, that's again part of the 5% art to trading. And what do? You kind of have to have a method. So for me, I'll wait a little bit of time and then I'll take a partial profit so that I get something out of this trade. All right, and our crude oil report's about to start in a few minutes too. So I'm going to take a 2-minute break. I will be back shortly and we'll get into our crude oil inventory report trade any second here. All right, I'm back. I'm going to start setting this up for our YouTube crude oil report. You can see that it came down, didn't hit the break-even stop yet. So hopefully you guys got a little bit off of that, and hopefully the stop holds and it will push higher. So that trade is still going, but it's time to set up for our crude oil report, which is coming out in less than a minute. So let me grab my chart here. Here's my 377 tick chart that I'm going to use. Here's the 5-tick spotlight chart that a lot of you use, and then here's the 8-tick that a lot of you use. So there's 3 charts. I'm going to follow this counterpunch chart. If you've been following along with my crude oil sessions, you would know by now. I've been doing this for years. So this is a 377 tick chart with counterpunch, and the report is coming out. Looks like it just did. Yeah, you can see the reaction here. So now we're going to wait our 2 minutes. Again, the upper left is the 5-tick momentum bar with spotlight. The bottom left is the 8-tick momentum with spotlight. And the big chart here is a 377 tick with counterpunch trader, which is what I'll use. And I want to mark the reaction range. Look at how we're pushing up towards $60 a barrel. Crude oil has been quietly going up and up and up. Anticipation of the end of the pandemic. Hopefully, we are hoping for that. And they've cut, production is way down, and now we're just got less supply and crude oil going up. And it's also probably a function of inflation. I'm not going to get into the fundamental reasons as to why it's happening. I'm just going to react to the trades. And the range of the reaction has gotten larger than what we've seen. Almost 40 ticks. Not quite. So we got another 30 seconds. There aren't any real setups here that I'm interested in. We got this green trade here that it's based on the reaction. And I don't really like to take that first trade based on the reaction. So I'm kind of waiting for a first new setup that comes along. You do have a setup to go long up here in the 5-minute. There's a trade. All right, so there's our first trade, and it's getting long at 58.51. A little bit of an awkward place to get long because it's going to have to break out to a new swing high. But that's the trade. It's targeting 66, and the stop is at 34. Hasn't triggered in yet. And it could be that we get a short instead, but I've got that trade placed. And we'll see what happens. So let me mark this so you guys can see it. So if it closes 2 times below our signal line or balance line, the cyan dotted line has a different name for counterpunch trader, but it's basically the same thing as we saw in Spotlight. 2 closes below that line will cancel the setup. And this is a setup that is an add-on trade. The calculator is literally, well, it was following the white trade. You can see the trailer going up and then these green trades set up while that trade was going. So I have to know the rules of the strategy. And it's still valid because I only got 1 close below that line. Has to close a second time below, and then I will cancel that setup. You also see some gray trades here that are filtered out trades due to the squeeze zone, and I explained that earlier how that works. In this case, you got the 50 moving average, the dark mustard line pushing up to the dark magenta line. And that creates a squeeze zone because it implies support moving higher. And so the short trade inside of that zone, we're going to filter that out. And an old phrase we used to use is it doesn't cut the mustard. And that's why that's a mustard colored line. So I always use little things like that, little phrases and colors to help remind me of some of the 5% art to trading. So now we have a new setup, but it's the same entry at 51. It's a tiny bit smaller. And usually I'll stay with the larger trade. I like the bigger target. And this trade's probably more accurate though, because it's more tuned to the moment. The other one was tuned several bars ago. But still, I don't, a 13 tick target doesn't excite me. And if it breaks out of resistance here, hopefully I'll be at break even anyway. So I'm going to go for the 2 extra ticks. But this is now the correct trade, long at 51, targeting 64, and the stop's at 37. And it did just get filled. But again, I'm in the bigger trade, same entry, slightly bigger stop, slightly bigger target. And it has to get through this 55-cent level, and it's trying. Let's see if it will. For me, I got to get to this level here, 61. And if it gets to 61, I can move my stop to break even, and we just got to 59. I got to go 2 more ticks. 2 more ticks. 1 more tick. There it is. So my stop's moving to break even. I'm in a risk-free trade, and I just got filled on my target 2. And so did the bright green trade, but you can see the bigger target. That's why I stuck with that one. And now going to target 3. And the stop has just moved up. So the stop goes up to 53 now. 1 tick beyond, break even. And this will be a one and done session yet again. One good thing about crude oil getting up to higher prices is the volatility goes up. So we might pay a little bit more at the gas pump, which sucks, but we make a lot more trading crude oil, which definitely doesn't suck. And what you make in better trading with crude oil will buy a lot more gasoline at the pump anyway. So I guess I can live with that, although philosophically, I'm opposed to it. But what does the market care what I think? All right, the stop just moved up to 54. Move your stops to 54. It looks like the stop will move to 57 in a moment. Depends on this bar. When it closes, you can see the tick counter. There it is. Move your stop to 57. I don't need this line anymore. So target 2 is our objective, whether you went to the smaller one or the larger one. Target 2, trade plan objective has been achieved. Everything else is just gravy. If it gets to target 3, great. If it trails even more, better still. But the trade plan is achieved as objective. And we utilize a very important philosophical concept called the power of quitting, which empowers you to quit trading when you hit your objective. Take what the market wants to give you and grow your account steadily over time. So we haven't stopped out yet, but we're very close. There it is. All right, so that trade's over. Stopping out at 57. One and done. One and done means you take one trade, you hit your goals, and that's it. Now, if you're trading the Spotlight, let's just look through at Spotlight Power Trader and see how those did. So here's the 5-tick momentum bar. Still wait your 2 minutes. There was this setup here. 2 minutes passed. You got a new setup, again, a little smaller. Notice that the targets are small. You'd have to go to targets 3 and 4. It did get to target 3. It even got to target 4. Look how perfect that target 4 is. Tuned to the market, dancing with the market, however you want to say it. We see that over and over again. There's a reason why these trade setups are what they are. This is a trade off the 50 moving average, the one I taught you a little earlier in the session with the proximity of the dots close to the line, our exhaustion level, and a perfect trade. So the 5-tick momentum bar got it done. First trade, hit the goals. How about our 8-tick momentum bar? The 8-tick momentum bar uses this dark blue trade as part of the plan. This one works on a 20 SMA. This dark blue setup is where the proximity of your exhaustion levels are on the 20 SMA. If any of you guys have seen or read my book on Amazon, Day Trading Quick Start Guide, I discuss the 20 SMA in great detail because it's a really good pullback zone. And so you're trying to trade into action moves, and the 20 SMA will often tell you the end of a reaction. And so the Spotlight, this setup on Spotlight takes advantage of that dynamic. And you can see it got in and hit target 2 perfectly, and then now it's coming off. That was good for 14 ticks. And so the 8-tick momentum bar with that setup is also going to be one and done. There was a short trade, but it never triggered in. It canceled. That's going to happen too. That's part of the mitigation process. We can't control the market. All we can do is control how we trade it, right? So you have an action move, just to illustrate the concept a little better. You have a reaction into your 20 SMA right here. You want your reaction to be about 1 to 2/3 of your action, and it's approximately that. A lot of people will just use a Fibonacci retracement, which is, if you think about those ratios, it's approximately 1 to 2/3, somewhere in there. 1/3, halfway, 2/3, somewhere in there for a reaction. But instead of going through all that math, my technique is to use the 20 SMA because it does a really good job of getting you really close to the end of the reaction. And then you got your exhaustion dots, which is our way of showing the sellers have become exhausted right at the 20 SMA, marking a possible end of the reaction and setting up a subsequent action move. And now it just stopped out. And the setup was tuned with a perfect target 2, stabbing through perfectly to make sure you get filled. I mean, that's great. That's better than hitting it right on the head as if it goes through a couple ticks and then stopping out at break even. This is a little bit below break even because of the key level adjustment around the 50-cent level that the calculator has built in. But as a trader, I'm going to put my stop here. I'm going to lock in my 1 tick. Even though the dots show that it's a little below the entry, that's okay. I don't want to give up anything when I've hit my objective. I don't want the rest of my position to lose. That's just how I do it. You have choices. Everyone's different how they trade. But hopefully that explains a little bit about how the strategy works and why things are what they are. Obviously, there's a lot more. There's other setups, there's other things going on. Here's another winning trade. You'll find that trades often continue to win. But one of the things I've learned, and I've been calling a live trade room for going on 18 years, is that you can't be seduced by all the winning trades that happen after. You might say, oh, all the money you're leaving on the table. But then you're going to get 3 days in a row where all the trades that come after lose. And you could have held on to your money and you gave it all back. And that creates worse problems. It's a slippery slope when you make money and then start giving it back because you don't know when to quit. So the power of quitting has very, it's quite significant. Empowering yourself to quit trading because there's always tomorrow's session. And so what you want is the highest average net profit per trade when you factor in all wins and losses. That's the number that matters the most. If that number goes up, if you trade more, then that tells you, okay, you should trade more if you have the time. If your average net profit, also known as expectancy, goes up, if you trade more. But what I've learned after all these years is that 90% of the time, there are some exceptions, but most of the time, you quit after that first winner. And if you do that long enough over a period of time, a series of trades going into the future, your average net profit will be higher by trading less. And you make more money that way. And how do you make more money that way? Well, we'll have a conversation with Albert Einstein about that, because we'll utilize his eighth wonder of the world, the power of compounding. So you don't make money by trading more. You make money by trading less and having that average net profit of all wins and losses combined, netting out to a higher number. And then when you get to a certain level in your account, you just move your finger from the 1 to the 2. And then later from the 2 to the 3. And you might have to go back to the 2 again and even to the 1 again. But eventually you're going to get up to the 4 contracts. Ultimately, you're going to keep growing like that. Not by trading more, but by letting the market give you what it wants to give you based on a tested trade plan that you have proven to yourself and that you could execute. And you prove that you could execute it as well through practice. And these are all concepts that we go over in here all the time. The power of 25, the power of quitting, the other 12 powers. All right, I'm going to go ahead and review our pound Aussie trade. Look what's happening here. Not only did we survive the drawdown, the stop well placed, support holding, but we also survived the stop movement up. And now it's come up and it's exited at target 2 and it's pushing up on target 3, and the stop is now at 79.03. I don't need this horizontal line anymore. And I look back at my FX Synergy platform, and I could see that it exited my target 2. And so I have 50% of my position left. It's waiting for it to get to target 3. I do have to move my stop, however, so I will be right back. All right, so John did point out to me in my private chat on the side here that Monday we're closed because of President's Day. I love President's Day because I love 3-day weekends. And so I always take advantage of my days off. I hope you do the same. So we will not be in here Monday. The next session will be tomorrow with John, and then Tuesday with John. And I won't be back until Wednesday, and I may come in on Thursday. So because of the 3-day weekend, next week, the crude oil report will be at 11 a.m. on Thursday instead of 10:30 Wednesday. So remember that. Next week, crude oil at 11 a.m. And I'll probably jump in here and do it with you guys. I usually do that, but I'm not sure. I have to check my schedule. But I'm thinking I'll be doing that with you guys. If not, John will be here. Either way, maybe we'll both stream together if we can. If this thing I figured out today works. I'm still learning this. So about ready to end this session, guys. I hope you enjoyed it. But before I do, I want to make sure that I answer all your questions. I'm going to go through the chat and see if you have any questions. Please type them in. And also, please give me a thumbs up on this video. It really helps us. I see like 52 people in here and 29 thumbs up. So thank you if you hit the thumbs up. And if you didn't hit the thumbs up, please do. It really helps. Helps in many ways. If you like what you heard, please hit the thumbs up. And don't forget to subscribe and hit the bell next to the subscribe button so that you're notified. We're going to be doing a lot of these. Let's see. Ed, my first experience with live YouTube streaming. It is necessary to be logged in to Google. Do folks sign in and out for each session or stay signed in? Security, privacy concerns. No, Ed, I think, when the live stream starts, you click on it like you would any other video. And so if you subscribe and hit the bell, you could be notified when we're going live, or you can just know our schedule. So here's the thing. Monday through Thursday, 9:30 Eastern is when we're in here. So the market's open at 9:30 Eastern. That's when we start, Mondays through Thursdays. We take Fridays off. That doesn't mean it's not a good day to trade. Friday is a good day to trade. We just don't do the stream on Friday. Maybe we'll do something else. I don't know. Everything's up in the air, but for sure, Monday through Thursday is set in stone. It's what we do. This Monday, a holiday, though. And then, so just to answer your concern, when the stream is over, you could exit. I think when it's over, everyone's kind of kicked out anyway because there's nothing to be in on it anymore. So I don't think you have to worry about privacy. Mary Jean says, actually, I do not see the pinprick dot. Oh, all right. So let me see. I can't make it bigger. Well, maybe I can. Let me show you this. Do you see this dot that's right in? Let me see if I can. All right, let's try something else. It's to the left of this line. So you see it? It's right under the first target. So here's another way to look at it. It's 90% of the way from the entry to target 1. It's the 0.9x, x being the multiplier. That is how the targets are calculated. All right, so 0.9, 90%. But it also has the other condition. It has to be 12 pips also, because we want a 10 pip target plus 2 pips of spread before we move our stop. And we have a couple exceptions when the target one is only 10 or 11 pips, and I'm not going to get into those little nuanced details right now, but basically we want to give the trade enough room to develop. We don't want that stop to be too tight. And so I find with this chart, 10 pips plus adding another 2 for spread, 12 pips. In this case, target 1 is 19 pips. So the 90% to target 1, the 0.9x, it exceeds the 12 pip limit. So luckily, the calculator does all that for us, and we don't really have to do that in our brains. But you want to know the rules. Anyway, that's how that works. So hopefully that answers your question. It's the same color. It's blue because the trade is blue. So, I mean, I can go in the calculator here and make it larger. Let's do that. So if I go into style and I go to long money management, I'm going to make it 2 weights bigger so you can see it. Nope, that didn't work. Why not? Let's try that again. Oh, I clicked on the wrong long money management. Let's go much bigger. Yeah, you see, there it is. You see the dot now that's to the left of the green line? I made it bigger just so you could see it. I make it a pinprick because I don't like to clutter up my chart. I want to see where that break-even level is, but I don't want to confuse it as a take-profit target. And my eyes, I got reading glasses on, so I could see it when I make it small. But now you know it's there. And you have the ability to adjust the size of it. I'm going to go back to my small look here. So there you go. And by the way, the stop, it moved to 06. I would put it at 04 because I always work around 5s. And I'm going to go move my stop right now. All right, just stopped out of the trade. Would have been nice to hit target 3, almost. I mean, that's pretty perfect, right? I mean, when you miss a target by barely, again, it's the accuracy of the strategy. There's nothing perfect in trading. It was almost perfect. It would have been nice if it went a little bit past it instead of a little bit in front of it. You got to give the strategy a little bit of benefit of the doubt or whatever. You could, when you miss a target barely, you could take that piece of the trade off at the next target down if you want. There's different ways to handle barely missing a target. In this case, the stop had moved up a good amount and trying to stay in the trade's fine. That's what I did. There's different techniques when you barely miss a target. But you could see how the trade was tuned to these conditions of the market to get you that almost a target 3. All right, so please, thumbs up. If you haven't given me a thumbs up, please do so. And then I'm about to say goodbye to you guys. Shane Richard says, you should also put up your links to get the system in description, just as suggested. Yeah, Shane, thank you for that, and I'm going to. Usually when this should have been done in advance. So what happened this morning is I'm using a new streaming software called Lightstream. I've never used it before. I just started this week, and I'm learning how to invite a guest. And so we were testing it yesterday in private mode, finally got it to work. And so today I started it and renamed, and I was going to put in a new description and everything, but I guess that has to be done in YouTube. It can't, I mean, I did it in Lightstream, but it didn't take. So I am definitely going to put the links in, and it's not going to be called Test with Guest 4 either. And little by little, I'm going to figure this out. Just all these little nuances and routines I'm still learning. But I appreciate your suggestion because you are dead on correct about that. And Ed with the comment that it seems like you have to be logged in for live chat. Yeah, I guess that's true. Ed is asking an interesting question. How is the OSOB used, if at all? And that's a great question. So I will show you. And then Dawn asking if I can show the 5-minute chart ES with Catapult. All right, so a couple things going on here. Let me see if I can get to this. And John saying, yes, it has to be done in YouTube. All right, so I learned something. So I'll have to get into a new routine. Hopefully my Kelly Bundy syndrome doesn't mess me up too badly. You guys know what Kelly Bundy syndrome is, right? All right, so let's see. Jan saying sound is okay. What am I missing here? Just want to make sure I got all your questions. All right, so let's go over the OSOB first. And I'm going to do it on this hourly chart on the pound Aussie, the one I showed you earlier, because this has a few different setups on here, and I could show you it works the same way. So I started showing you this when we first logged in. I actually took this trade last night. I'm learning my own strategy. I never thought that it would work well on time-based charts. And now I'm learning that it actually works amazing. And why do I say amazing? Well, because it's winning 81% of the time over the last many trades, dating all the way back to March, to right when COVID bottomed out, because anything before that, and it just kind of was a different world. So since COVID bottomed out and the market's tanked, it's been winning. And also this is on with mini lots only. So that may not look like a lot of money, but that's like 24 pip average net profit per trade per exit. That's really good, actually. Anyway, so I'm learning this about time-based charts, and this is using the setups of the OSOB, which is why I wanted to show you this to kind of explain how it works. So the original Spotlight Power Trader, which is now the Spotlight Master Suite Gold level membership. Okay, it's been rebranded ever since I left NetPicks close to 3 years ago. And I had to rebrand it because of a variety of reasons I'm not going to get into. But anyway, the original setups of the Spotlight uses the OSOB indicator. And it's a very interesting indicator. And by the way, OSOB stands for oversold, overbought, for those of you who didn't know. Okay, so it's a very unique indicator, totally proprietary, but it does some amazing things for us. So the first one I'm going to show you is the pink and blue trade. I don't see any blue trades in here, but the pink trade is the same as the blue trade, but the blue trade is long and the pink trade is short. And I'm going to blow this bigger and put it at the right edge. All right, so you see there's a setup there, right? And you know it's a setup because the little plus sign is your entry, and because it's below the balance line, it's a short trade. It can never be a long trade if it's below the balance line. The green dotted line is our balance line. Remember the balance of power. It's like the big crocodile pit. Tug of war between buyers and sellers. All right, so we get exhaustion dots, which means the buyers are tired. Not only that, but on the third dot or up to 4 bars to the right, whichever happens first, a bar that closes down below the balance line is what we're looking for to give us a setup. How do we know it's down? Because it's gray. Because the way the colors work, light gray is always closing down and dark gray is always closing up. You just have to memorize that. All right, so that's a light gray. But why is there an entry here and there wasn't one in other places? Because of our OSOB indicator. When we get a pink bar that stabs up above our zero line, which is the yellow horizontal line, that's our zero line, we have a pink bar or more, in this case several more, that stabs up above the zero line, that tells us that the market's overbought. And because it's pink, it means it's going to give us a pink short trade if we get exhaustion dots and a close below our balance line. So you need those 3 conditions. And that's what gives us the short trade. And then it's tuned to market conditions. Sometimes it'll keep going, and that's why we have a trailing stop. But basically, that's why we got the pink trade. And that's how we use the OSOB indicator. And we don't, here's another cool thing about it is that before that even happens, we could already start seeing that it's overbought. So we can be on the lookout for a possible short trade. Now over here, you have a blue line going up, blue bar. So that tells you the market's oversold and you could get a long blue trade, and you would have. It would have been this one. But coincidentally, it's also a green trade, and the green trade is the other part of this indicator, the green line. The green line is a trend strength indicator that we also use. Okay, so first of all, let's finish with the pink and blue explanation, and then I'll teach you the green. So I'm going to turn the green trade off because I want you to see the blue trade. Because the calculator can't show you green and blue. It has to choose one, right? So it chooses the green because of the way it's programmed, but they're both the identical trade. Whether it's blue or green, it's the same setup. All right, so I'm just going to turn this to false for a second so you can see the blue trade. So now it's blue, you see? And the reason why is because you had a bar pointing up, this time only one bar. The pink trade had multiple bars, so it doesn't matter, right? And also when that happens, it does not mean the market's going to go up. It's just another piece. It's another confirmation piece. The way these strategies work is you stack together the right list of ingredients to a recipe to make the food taste good, right? I love the kitchen. I like to cook, so it's a great metaphor. The right ingredients create the right dish. In this case, it's the right pieces of price action confirmation that gives you a trade where the odds are on your side if you apply that to a trade plan that you can test and prove. All right, so you have to remember all these pieces have to fit together. All right, so are you with me so far? So the bar goes up, it turns blue, the market is now oversold, and we get the exhaustion dots, and the first bar that closes up above the balance line, it has to be either on the third dot or up to 4 bars to the right using our default settings. This time it happened on the third dot. That's fine. And that gives us a setup because of the oversold, overbought indicator getting above the 0 line there, that blue bar. Okay, that's how the blue and pink trades work. Let's turn the green trade on and talk about that because it is similar. It's not exactly the same, but it is a similar concept. And the green trades can be very powerful. All right, so the green trade happens like this. The green line has to get above the 0 line. It's pretty simple, right? But how do you know if you're going to go long or short? Because it doesn't change color. The pink and blue is easy. Blue means long, pink means short. Green can be either one, long or short. And the way it works is it's going to go the opposite of the trend, because the trend going down is what has caused the line to go up. The strength of the trend going down is why the green line is trending upwards. It doesn't matter if your trend is up or down. The green line is just measuring the strength of the trend. However, it is a lagging indicator, and we have to understand that. Just because it's going up doesn't mean the trend will continue, and it often won't. And that's fine. Lagging indicators do have merit if you use them properly. We are using it to mark when a trend is getting tired. The whole notion of exhaustion and getting tired is a big part of the principles of what makes Spotlight, Power Trader, Master Suite, and Counterpunch Trader how the strategies that they are and why they're so good. So in this case, you would trade in the opposite direction of the trend. The calculator knows that, and so it creates the long trade. It just so happens that it's also oversold due to the blue bar pointing up. Both happen together. So the calculator has got a hierarchy of which colors to choose, and the green trade is at the top of that hierarchy. That's why it chose green instead of blue. It's nothing more than just a choice that we made in programming. Okay, but it's the same setup. Either one of those conditions would have given you that long trade. Then the market gets overbought with the pink bars. Doesn't mean the market's going to go down. Remember, it's all about price action confirmation. So then we get exhaustion. We know by our dots. Then we get a bar, doesn't close below the balance line. It pokes below the balance line, but then closes up. How do we know it's up? Because the bright color goes in the direction of the trade. So bright green is long, dark green is down, closes down. In the case of the short, bright red goes in the direction of the trade, closes down, and dark red closes up. That's the whole spotlight aspect of the name, right? It's shining the spotlight on the trade for you. It also helps you psychologically because the bars are green. What do? Well, nothing. You stay long. So it keeps going, see? Then we get another set of exhaustion dots, and these overbought conditions here are still valid. Even though you got another one, you got a few that are even smaller. They barely poke up. Those count also because the calculator, see how it is barely above? That counts. But it doesn't matter. You only need one of these, but you have more than one. Okay, but it's still all about price action. Price action is still in charge. That's why we have to get the exhaustion and the price closing below our crocodile line, our balance line, the balance of power. See, and then we get the setup. And sometimes, as you saw earlier, a setup will show up and then it will cancel. And then that's just, we cancel it. That's fine. And sometimes it'll trigger in and it will lose. Yes, we get losing trades too. But when the odds are stacked on your side, like here's a losing trade, see? Barely triggered in. Losing trades happen. This is the trade I was in last night. I set it up on FX Synergy. I knew I was going to come off at my targets. Okay, but it's a green trade again. So why? Because the green line went up above the 0 line. This would have been a green trade here. Why is it filtered out? Why is it gray? there's a filter working here, and I don't know why. I have to put on some other indicators. The calculator knows. Kelly Bundy syndrome kicking in. Okay, the reason why is what's called the crossover filter. When the 50 moving average crosses over the 200 moving average, you have to go a certain amount of bars to the right before it lets you go long. So this was filtered out. That's fine. I wouldn't have been up in the middle of the night to trade that anyway. So this is the one I took. Notice it's set up at 8 in the morning. That's 5 in the morning my time. I took it later. I took it in this zone. And then it came down and filled me, and then this is what happened. All right, but that's how there's one other way the OSOB indicator works. So let me just finish, and then I'll get into Don's question with Catapult. So the other thing is there's a strategy that's also kind of misunderstood and one that we haven't explored a lot of, and it actually, a lot of you have learned it, and it works really well, and it's called Sub-Zero. And have you guys heard of Sub-Zero? It's using Spotlight Power Trader concepts, but it's a very special setup. And you could learn it. There's an indicator set for it, and if you have the Spotlight Master Suite, you have access to Sub-Zero. A lot of you don't even know that. It's like an extra strategy that you have, extra indicators and everything. All right. But you could also do it on this chart. What happens is when the green line, remember it's measuring trend strength, when it gets below -20, we call it Sub-Zero. All right. And then you could start using your exhaustion dot concepts. In this case, these three, because by the time your third exhaustion dot occurs, the green line is in Sub-Zero territory. Now you just need a bar that closes below the balance line, and that gives you a setup. But I don't have Sub-Zero on this chart, but I could draw it. I could use my tools and just kind of draw it. It's going to look like this. So here's my entry 2 ticks below, or 2 pips below. Here's my target 1. So you could use Sub-Zero without the indicators. Now you might say, okay, there's a setup, but then you get multiple closes above the balance line. That's true. When you get 2 closes above the balance line, the trade setup cancels. So even though you had a setup, it then canceled. So then what? Well, then you have a new setup here. So then you could use these 3, right? Then you can do the exact same thing. And by the way, I did this wrong because this bar closed above the balance line. It's dark gray. I confused myself. And then you go 4 bars to the right, you don't have a bar closing below the balance line. So this didn't set up. It wasn't even a setup. This one here, I made a mistake. But the next one this is a setup. The first bar does close below on that third dot. And we are still in Sub-Zero. And even if it came back up again, we could still use the setup. So there's rules. But anyway, this was the Sub-Zero trade. This one, a little more reasonable. And you could see it triggered in, and it came down, and it got to target 2. And then it would have come up, and right in here, you have a trailing stop where it would have stopped out. So it was a nice trade. Down like from 53 all the way down to 95. 57 pip trade to target 2. You can take profit at target 1. Just like Spotlight, you trade it the same way. The setup's calculated the same way. Everything's the same, except that you're using this concept of Sub-Zero for your setup. So it's a really great trade. It's a trade of opportunity. It's a little bit different the way you handle it from a trade planning point of view. So maybe we'll get into that at another session if you guys ask me about it. Happy to talk about it further. But that's the answer to your OSOB question, Ed. Hopefully that was enlightening for you guys. You understand how this works. It's a really bizarre looking tool. By the way, it gives you a heads up as well. That's what I like about it, because you can see where the line is or where the bars are closing, and that helps you then heads up, right? It gives you like an advanced warning that a setup could be imminent, and that helps a lot. All right, so now catapult. Okay, so I need to open it first of all, and I need to find it. So I got different computers, and sometimes stuff moves around, and I have to figure out where my catapult is. 1 second. I don't remember. Let's try. Try this one first. If not, I'll just open up a chart and put on the default calculator. Don, is there a specific question? John says Sub-Zero could be long or short. Yeah, it just depends on which happens first. Okay, so this was the wrong. All right, I have to let this finish loading. Sorry for the delay, guys. Give me a second to. I'm loading it on a different monitor because I want to just make sure I get the right thing first. So, okay, so that was wrong. I know where it is now, so I'm going to close this. All right, I could open it up on this one now that I know what it is. So I can go to Open Workspace. And it's what messed me up is it's on a template, but it's not on the primary. It's on the second one. So it's going to be Catapult ES Member Template 2. Yeah, it's that one. That's going to have some other stuff on it too. So this is going to take a few moments to open up, and then we could look at it. Yeah, Don, you're on NinjaTrader, right? So with a 5-minute chart, I would suspect that the setups will be really close. They won't always be perfect because the data server could be a tick off or half a tick off, or there could be some latency issues, or there's other things that could like make it so that it's not going to mesh 100%. And then maybe I'll lose and you'll win, and you'll get a setup where you win and I lose, or vice versa, or it comes out in the wash. But to try to get them to match up is kind of an exercise in futility because it just can never happen. Data is just one of those things that we don't have control over. Even TradeStation has different data servers around the country, and I've seen TradeStation charts not even look the same because it's a 1/10 of a tick difference for whatever reason. That's beyond my field of expertise. So one of these charts is the default, and now I have to figure out which one. I think it's the one on the right. I don't remember. Oh, no, wait. It wouldn't be that. Well, I haven't looked at this in a while, so. Yeah, Ed, you can interpret that trend strength indicator in a number of ways, but remember it's a lagging indicator. So maybe not that it's waning, but that it has waned, and maybe it's too late. So we're not using it really for what it's intended. I was explaining it to you so you knew what it was, but what we're really interested in is when it tells us that a market has possibly become overbought or oversold based on the current trend when it's above the zero line. And then when it gets to sub-zero, we're learning that the market has kind of frozen over and it's kind of stuck. It's in this consolidation, low volatility mode, but it's getting primed to break out. And the more that builds, it builds pressure. And so you could use other indicators also. You could use a Bollinger Band squeeze. You can use other types of indicators that will show you different ways to use the price action. It just so happens that with the exhaustion, the balance line, the price action itself, combined with the market freezing over, will put you in front of the next big move quite often. And that's what Sub-Zero is about. Okay, so what you said is true. It's just not exactly how it's being used with the strategy. And that makes a difference. The way we use it is almost, it's more of a leading indicator, even though by itself it's a lagging indicator, if that makes sense. So for whatever reason, this is taking forever to load, Don. And forgive me for, I wonder if I can keep, let's see. I don't even know which chart I'm looking at here. Is it this one? No, that's a custom chart. Is it this one? That's a custom chart. Is it this one? Yeah, it looks like it's this one. I think this is the one. Again, it's been a while since I've opened this, but I believe that is now. So I don't know why the other's not loading, but we could see Catapult Trader. So the first trade was at 9:15. I think that's a little bit in front of our trade plan, right? So that might have been a missed opportunity. And then you get a long trade here at 10 a.m. and it looks like it unfortunately triggers in and then stops out. So it looks like it should have done better than it did, I guess. It depends on when you're getting in and out. But anyway, so just for you to compare, does that look like your chart? I guess I'm asking for too much data here on these two charts. I could probably change them. Yeah, this is going all the way back, 2 years. No wonder. No wonder it's no good. Let's just go back 10 days. That'll make a difference. And this one finally loaded. So, do I have both filters turned on? I don't think I do with the default settings. I think they're both off. Because this is the default. The other ones have the filters. Let's see. So I've got, the EMA filter is true, but the multi-trend, the multi-time frame filter, multi-trend, I guess it is set to false. And then the CCI filter is also false. So on the default settings, false. This is the default. The other ones are using the filters. This is still taking forever to load. It's kind of annoying. So I think that concludes our session for today. I've got another appointment I've got to get to, so I can't just continue to hang out with you this morning. I hope you guys enjoyed the session. Again, if you didn't give me a thumbs up, I hope and wish you would. Please do. It helps us. Otherwise, have a wonderful day. Don't forget, John will be in tomorrow with Ninja Charts. Dawn, you might want to compare notes with John. And then Monday we're closed because of President's Day. John will be in here next Tuesday. I'll be in here Wednesday. I'm going to be sending an email out to let everyone know about a special session that we'll be holding where we're going to go over our rapid fire entry tool for our forex trading with our FX Synergy partners. All right, guys, have a wonderful day. Thanks for joining me. See you next time.